GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the bears are hibernating and the bulls are throwing an open bar. I'm your host, Jay Hamilton. It's Tuesday, May the 13th. This episode was actually recorded on Friday, May 9th. Today, we are asking a couple very important but somewhat morbid questions. What happens to your Bitcoin when you die? What if you haven't thought about protecting your Bitcoin ahead of you dying and your wife or your partner doesn't know how to use your seed phrase or doesn't know where it is? How do you access your Bitcoin and the gains right now, but do it in a tax optimized way? These are all questions that are being asked, and I get asked quite a bit, but I noticed I'm getting asked them a lot more. And I know I will get asked them a lot more in the coming years when Bitcoin continues to go up in price, as we all know or expect that it will. Today, to break this all down, we're joined by Zac Townsend, co-founder and CEO of Meanwhile, one of the first life insurance companies built on the Bitcoin standard. You heard that right. Life insurance and Bitcoin. These aren't two things that you would typically think about putting together, but Zac is a friend that I have spoken to a lot over the past year, and you guys are going to love what he is building and how he is thinking about the future of the Bitcoin economy. Before we jump in, do me a quick favor. If you guys like the show, give me a subscribe, give me a like, give me a review wherever you are. It helps us huge, helps the algorithm, and helps us make sure we get the best guests on the show to make you informed with your crypto investments. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Zac, welcome to the Milk Road Show.
Happy to be here, Jay. I just want to start by saying we're the only life insurance company, not one of them.
There you go. The only one. I want to start with sort of a zoom out here. Everybody focuses so much on Bitcoin's price, but you really focus on Bitcoin's purpose. What is Bitcoin's purpose in your mind?
Wow, I love that phrasing, Jay. I'm going to have to steal it. So for me, Bitcoin's purpose is as a long-term store of value that is global, is decentralized, it's outside the control of any government. It's truly the the highest version of like digital money and money as store of value. And that's exactly right. We happen to be recording this on a day where Bitcoin is approaching all-time highs. We'll see if it happens. But honestly, we try to run the company not asking ourselves like, what's the price of Bitcoin today, or this week, or this month, but that long-range perspective of like, what's the purchasing power of Bitcoin going to be in 10 years, 20 years, 30 years? And for us, there's no question that Bitcoin will still be here, will be a persistent store of value, and will be more persistent as a store of value than most, if not all, fiat currencies. So that's how we see Bitcoin, as having this really differentiated long-term purpose.
Yeah, what I love about you guys and all the conversations we've had over the years is the not a lot of people in crypto are focused in decades yet. Like crypto is still so new that so many of the crypto companies right now are trying to grab the now opportunity. And you guys are really you're one of the few companies I've met that's building for the next 100 years of Bitcoin and thinking about where is Bitcoin going to be 100 years from now. And that frames it very differently than I think a lot of the companies that we talk about currently are seeing it a different way. Let's talk first about what do you think happens to most Bitcoin when people die? I want to ask you that question
Yeah.
because I feel like you've thought a lot about this. I have not thought about, honestly, I haven't even thought about this at all. What happens to
Yeah.
my Bitcoin and my crypto when I die? Like if I
Yeah.
died
Yeah.
tomorrow, it would be a problem. I have not thought about this. So what do you think will happen?
Is why you need a big life insurance policy, Jay. But let me just start by saying, that long-term perspective, I do think that there are lots of people building for the long term, but it's absolutely the case that like there's so many like trading firms or like yield chasing, and I think that all of that is important. Like I actually do a lot of that stuff too. But if you look at the like global traditional economy, there's also institutions that think in the really long term. And that's what we try to do. And that may be my personal feeling, by the way. I do not know what's going to happen to the price of Bitcoin, between day to day, between now and when this show is released.
Mhm.
If you ask me if Bitcoin's going to go up or down relative to the dollar, like I have absolutely no idea. So I've definitely built a company sort of around that idea. But the other thing I'd say is there is this strand of like thought of culture in Bitcoin that I like place us like squarely in around hodling, around intergenerational wealth transfer, around retiring your bloodline. And those ideas are very much in sync with like what life insurance is, what life insurance is for. So we I think there's a lot more press and a lot more play on the day to day, but actually, I think the culture and purpose of Bitcoin is more long term, and we're like happy to be part of that, like building that institution. I completely forgot the question. I just like said what I want to
No,
say.
yeah, you just did exactly what anybody should do when they're getting interviewed, which is, yeah, say what you want to say. Don't listen to the interviewer. Uh, what happens to everybody's Bitcoin when
Oh,
they
what happens
die?
to Bitcoin when you die? Yeah. Well, this is actually like part of the original theory of the company, right? Like I have young kids. I have a 7-year-old, a 3-year-old, and my wife is very sophisticated. She is smarter than me in so many ways. But I would not say that she is a big believer in Bitcoin. And I was thinking about this very problem. I was on Reddit or Twitter like 5 years ago, and you hear these horror stories of people who die, and then their wife, their kids, their loved ones like don't know where the Bitcoin is, don't know where how to access it. And as people do more and more to secure their Bitcoin, you put it on a hardware wallet, you bury it, that hardware wallet in the backyard, whatever it is. I think that this is like a serious problem. And the truth is, you don't want to think about it. Like nobody wants to think about dying. And also, just me, my friends, even those of us who like really got introduced to Bitcoin in 2013, 14, 15, we all tend to be like pretty young. So I think we haven't really, we're just starting to grapple with that question of like, how does self custody, how does Bitcoin like interact with, my eventual demise? And then similarly, a lot of what life insurance is about, and I think we'll talk more about this, is not just about protecting your kids and making, or your nieces and nephews or whoever your loved one is, but it's also about, there's a lot of tax benefits to life insurance. So I think yeah, we see that resonate with people because so many Bitcoiners, so many crypto folks, so many degens are sort of transitioning in life from just being themselves to like having a serious girlfriend to getting married to having a kid or two. And we see that in our customer base that like you're somewhere between like serious girlfriend and two kids. Like that's and that's when you like at least the thought is crossing your mind like what happens to this loved one or these loved ones when I die, and like how do they get my Bitcoin?
Yeah, and let's be real, I don't want to think about it either. Yeah, like
Yeah,
it's
yeah.
not
I feel
enjoyable to
sometimes I'm
think
like I'm
about
the
my
bearer of
death.
bad news. Like,
Yeah.
uh,
But it's
yeah,
it is a very important question to ask, because when you do ask yourself that question, like if I sit here right now, and I don't know if you've ever speculated or made a guess on this, but like if most people holding crypto right now, any of them were to die, my guess is that a lot of their Bitcoin would not be recoverable. A lot of their crypto would not be
yeah,
recoverable because they probably do not have their seed phrase anywhere where anybody else can find it and access it.
yeah.
Like,
Right?
on
Yeah.
purpose, right?
Mhm.
Like,
Yeah. So,
so it is a
yeah,
problem. And I think anybody can acknowledge that. Okay, so let's shift now. You tease sort of the next question, which is let's talk about life insurance as a product, because life insurance is a very interesting, it's one of the oldest financial products, which was really created not just as a means to insure your life and protect your family and the what we would typically think about life insurance, but it also is created and has become one of the best tax optimization products in the world. So, for at a very basic level, can you just explain life insurance to us?
Sure, sure. So, as we're talking about, we're all going to die, and we don't really know when that is going to happen. Hopefully, it is like far, far in the future. And the uncertainty that exists for any like one person, when you start to like take a bunch of people and you put them together, you start like through the law of large numbers, just like through statistical regularity, you can say, okay, if I have 1,000, I'm 39, if you have 1,039 relatively healthy year olds, then we know statistically that like two or three of these people are going to die. So the original idea of life insurance is, okay, the 1,000 of us will like put $1 in a pot. So then there's $1,000 in the pot. And then if three of us die, we'll each get $333, right? So although the chance that we're going to die is very small, we don't know who among us is going to be the poor, SOB who dies this year or the next 10 years or whatever, right? So that's the like ancient, like very original theory of like risk pooling your mortality risk. So life insurance is very much about like what happens to your family when you die. And what happens, as you mentioned, Jay, is that society, governments, we feel like buying life insurance is a good thing because orphans and widows starving is bad. So we decided that we should incentivize people to buy protection on the off chance that they die. And that has led to a series of tax benefits and tax privileges for life insurance. Also for annuities was like the flip side of life insurance. And like any, decent, well thought out, tax benefit, what happens over time is that you end up with products that still provide the critical protection that like your family needs and deserves, while also being optimized and like sort of making sure you're getting these tax benefits. I think our product, the only other like generic thing I'll add about life insurance is that life insurance tends, I think lots of people think about term life insurance, and term life insurance is like it lasts for a certain term, right? So it lasts for like 10 years or 20 years. And since you're very unlikely to die in the next 10 years, then the payouts are very high, right? You might like pay $1,000 a year for $1 million in coverage, because you're just likely to like get to the end of those 10 years and not have like received any money. Now you did receive something, by the way, which is like protection in case you died, but we didn't want to start with that product because we think like there's a bad history in Bitcoin and crypto of taking Bitcoin from users and then not giving it back to them. That is like a regular, like that is the course of business of running a term life business is you collect a lot of premiums from people and only a few of them die. So you only pay a few people. So we started with a product that's called Whole Life and it lasts your whole life. And back to what we talked about, unfortunately, you will eventually die. So there will eventually be a payout. So the way our product works is you pay us, a certain amount of Bitcoin over 10 years. That amount's sort of up to you, but let's say it's like one Bitcoin a year for 10 years to make the math simple. And then the coverage lasts your entire life, your whole life. And then you die, hopefully, at age 95 happily. And well, the death won't be happy, but like, you're happy that you lived to 95. And then we pay your beneficiaries out, a little bit more than you paid in. So you paid us 10, we might pay out, 14 or 15 or 16, like depending on your current age. So that's both like what life insurance is like for, um, how you ended up with tax privileges because we don't like orphans and widows starving, and then how that evolves into products like Whole Life that we offer for everyone's benefit.
What is the range of policy? Uh, you said that the example was one Bitcoin a
Yeah, yeah.
year.
So the smallest policies we're doing right now are a tenth of a Bitcoin a year for 10 years. So
Okay.
like one Bitcoin in total. And then The largest policies we do, sort of, how much you exactly pay depends on like your age and how healthy you are. But the biggest policies we've done are like 3 Bitcoin a year for 10 years, so like 30 Bitcoin. We've had users, and congratulations to these folks who have asked us to buy bigger policies and much bigger policies than that because of the benefits. But we are running an insurance company, and one of the things about insurance companies is you can just get unlucky, right? So you don't want to sell 1,000 Bitcoin policy to one person, and then like that person gets struck
And
by
that
lightning or
person.
hit by a bus. That's just like like you can just get unlucky. So one of the ways we manage that is that we have a policy limit. And to go back to the original question of like what happens to Bitcoin when you die, we're actually pretty clear with people. Like, we don't think that you should take all the Bitcoin you have and like put it in a policy. What we find is that people are putting some amount of the Bitcoin they have into the policy, sort of like how much of this Bitcoin are you planning to hodl, or that you want the like tax. I should just explain the tax benefits.
Yeah,
So,
let's go for that.
one is that your beneficiaries get the Bitcoin they receive, the 15 in my example, tax free. The second is we're turning that 10 into 15. And even if you were doing that like through this exact same yield strategies that we do, which we should talk about, you wouldn't be getting the same compounding because there's no tax every year, right? So if you had a Bitcoin and you earn 3%, then you would owe interest income tax that year. But because it's like a 401k or an IRA or something like that, it's growing, compounding tax free, then that's the tax benefit.
Okay.
And then the third thing is, as you mentioned briefly, you can borrow against the policy tax free. So what that means is, you put that 10 Bitcoin in, you're now in year 15, Bitcoin's appreciated to $1 million a coin or $13 million a coin or whatever number you think it's going to be. And then you can borrow Bitcoin out of the policy. And what's nice about that is, one, we don't actually expect you'll pay us back. We expect you'll die, and then the loan will be netted out against the amount we owe you. So you're not really borrowing with the expectation that you'll pay back in your lifetime. You're borrowing with the expectation that you're like sort of borrowing against, the benefit that your kids or wife is going to receive. The second is that it's new tax basis Bitcoin. So if Bitcoin has appreciated to $1 million from 103,000, then you don't owe any capital gains between that 100,000 and that $1 million. And the third thing is there's like no margin calling. There's no posting a margin. There's no ability to get blown out of this position, right? Because it's like the loan's denominated in Bitcoin, the collateral is denominated in Bitcoin. So it all just, there's no risk of ruin, even if Bitcoin goes down 50%, which, occasionally happens. So what we see is, to go back to like the rational allocation, is even people who have 1,000 Bitcoin, who they don't really need the protection per se, but they sort of put some Bitcoin in the life insurance policy in case they ever need some liquidity, like that's the Bitcoin they want to get liquidity from. And then we have other people who are planning to they have 10 Bitcoin, they're planning to hodl almost all of it. So they might buy a 6, 7, 8 Bitcoin policy. And they just want that rest in case they something happens. So we don't try to say we're holistically solving your problem. I think it does force people to think about what they're doing when they die. So like we have a legal obligation to make sure your wife or your kids get your Bitcoin. But then also, there's solutions at Unchained or Casa or whatever that also I think help you. And what we find is that people sort of make some rational allocation between like hardware wallet buried in the backyard, some like, fail safe measure like an Unchained or Casa, and then like our life insurance policy, which is the combination of the legacy management, the protection, and the tax benefits.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn. the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. Mm-hmm. Okay, a bunch of things to unpack there, but if I can try to simplify it. So if we separate the when you die from the tax benefits right now, on the when you die side, you are guaranteeing a payout to your family. You have to trust that you have to trust, meanwhile, the custody of your Bitcoin, which we're going to talk about that in a second. I want to talk about that trust and what that's
but we have a legal regulatory obligation to make sure that we have to if they've moved, we have to hunt them down. We have to find the people that you say should get your Bitcoin and give them your Bitcoin.
You have to hire a bounty hunter to find them if you can't find them easily. But this is an important point, and I want to be clear. I wouldn't have invited you on this show unless I believed that Meanwhile was a trustworthy company, and I'm not the only one. You guys raised $40 million recently. There's a lot of people that trust you for good reason. But we'll come back to centralization and custody trust in a second. But so on the passing on your wealth side, check. This is a great way to ensure that your Bitcoin wealth passes on. Plus, you're getting gains on what you're passing on versus just hodling it. And so not only are you getting price gains, you're also getting gains because of some yield. And I want to talk more about how you guys generate that yield in a second. But okay, so on that side, feels like a no-brainer. Check. On the tax optimization side, there's really there's two parts to that. One is the ability to get some gains right now. And we recently had Ledn on the podcast. There's another way to get some gains, it's just to do more of a traditional Bitcoin-backed loan, right? Now, those function very differently. They don't have tax optimization in them in the same way that life insurance products do. Okay, you want to get some gains on your Bitcoin? This is a good way to do it. On that one, just quickly, I just want to understand obviously I can't immediately take out a loan on a policy, right? What is the timing on that?
I guess there's two different elements of it. The first is you're putting value in the policy, and then there's you can think of it as the savings account that's sort of growing inside the policy. And when you sign up, you get the whole table that's going to be true for your entire life. So that is the amount of Bitcoin that's the policy is worth. In dollar denominated policies, is called the cash value. We just call it the surrender value and then that value is amortizing over time, and you can borrow against it. So you put it in, and then you can borrow more the longer you've had the policy. There's a really practical limit, which is we don't let you put Bitcoin in and immediately take it out, because that is a great way to money launder. So there's a cooling off period of when you put Bitcoin in, getting it out.
Okay, that makes sense. So you should, if you are there's just
you should definitely be thinking in the long term. This is not
thinking in the long term.
Yeah, this isn't a way to put policy in now or value in now and get do some borrowing in 2 months. You should think more what portion of my Bitcoin am I going to hodl really is long term hold, and then if in year 10 you Bitcoin has appreciated so much that you're buying your second home in Puerto Rico, as crypto folks do, then you can do that by borrowing value out of the policy.
Yeah, yeah, which is very, very interesting, right? That
Oh
you
yeah, yeah,
could
yeah.
you
We
could
actually,
fund.
despite what I said, we do have some policyholders who don't even have kids because they're just like, oh, eventually I'll name beneficiaries, and the ability to borrow value out of the policy is in time so valuable. And in
It's
fact,
so
if you're
valuable,
doing it
right?
when you're 25 and you're looking out, you're saying, oh, well, actually at 35 or 40, that might be when I want to like get some liquidity on this to buy apparently the second house in Puerto Rico. I don't, perhaps I could have, which I don't have, but like
What about the Lambo, Zach? Come on, everyone wants to
yeah, the
buy the
Lambo,
Lambo. Let's buy
yeah,
the
yeah,
Lambo.
exactly.
Okay. Okay, so on that side, very effective as well if you want to get liquidity from your Bitcoin, get some cash in a tax advantage way. But the key is just it's not an immediate thing. You'd have to be willing to do that, looking to do that more down the road. Um, okay, let's talk about two things. How do you guys generate yield? How does that work? And then let's talk also about custody and how you offer
Well, these
secure
things are like
custody.
intimately related. Like, first, I want to start by saying, like, briefly, how the company works is we are a licensed and regulated life insurance company in Bermuda. Bermuda is not the Bahamas. It's not BVI. It's not Cayman. It is like the insurance capital of the world. This is where many of the most serious, most well-respected insurance companies are regulated. Our regulator is very collaborative, very, understanding. They let us do this interesting things, but they are like up in our business, right? There's an insurance code. We meet them. We send them monthly reports. We meet with them quarterly. There's an independent board of Bermuda, half independent board of Bermudians who we like report to quarterly. There's an internal auditor. There's an external auditor. There's a chief risk officer. There's corporate policies. There's all the stuff of an insurance company sort of there to like manage the company and the risk. And one of the things is like we have to have a bunch of capital, right? So our every time our customers, become policyholders, there's a bunch of actuarial math done to make sure that like we are also have enough Bitcoin there, that like we have enough like first loss capital to be solvent in the terms of insurance companies, right? So there's a lot of oversight. And what makes the company special is that instead of being in dollars or euros or yen or Swiss francs, the entire insurance company is in Bitcoin. So we take premiums in Bitcoin, we pay claims in Bitcoin, and then we do all that like insurance mumbo jumbo I just mentioned, like the audited financials and the solvency calculations and the reserves. That's all in Bitcoin. So there's no chance that the price movement of Bitcoin can like blow up our company. Like our company has existed, um, or I've been running the company, Bitcoin went down to like whatever 16,500, and now it's close to all-time highs. That doesn't like in a fundamental sense affect the business because like we have a set of assets that are denominated in Bitcoin and we have a set of liabilities denominated in Bitcoin, and they like match entirely like in Bitcoin. So um for custody, we use Anchorage, which we find is the right balance of respectability and people know who they are. And I don't want anyone to think that if they start chopping off my fingers, like they can get our Bitcoin. So there's just like a practical reality that like lots and lots of people at the company are involved in the movement of Bitcoin. We are in different places. Very very secure. How do we get yield? Basically, we get yield by doing we have something that basically no one else in like crypto land has, back to like core fundamental long-term nature of the company, which is like we have duration. Like we're going to hold this Bitcoin for a long time. And what we do is we go to institutional counterparties with like big names. Some of them are public. Several of them have credit ratings. and then we lend them Bitcoin. And what we get in exchange for the duration that we're providing them is we get credit protections. So we get like more collateral, we get seniority, we get covenants. Like we negotiate like 100-page lending agreements with our counterparties. The number one trade we're doing right now, or lending we're doing right now, is actually just like a different tax arb, where if people have low tax basis Bitcoin, they don't, and they want to do something with that Bitcoin, they want to pivot into micro strategies, they want to do Babylon or LBTC or whatever, that would be a taxable event for them. They would owe capital gains tax if they did that. So what they do is they give us low tax basis Bitcoin. So they like hand us 100 Bitcoin that we put in a segregated wallet, and then we lend them, 97 Bitcoin back. It's a repo, so it's not a taxable event for them, but we've repoed them high basis Bitcoin, so they can do what they want. They can go do DeFi or whatever, pivot into MicroStrategies or 21 or whatever it is. So what's amazing about this is it's just a complete result of the fact that Bitcoin acts more like a currency, I think, in our conception and our understanding, but it is taxed like a commodity.
Hmm.
And that mismatch between its use and its taxation leads to this like interesting exchange that we can do with folks. But what's amazing about it from everyone's perspective is because they've given us 100 Bitcoin and we've given them 97, and what we're really doing is very carefully through the legal agreements, trading basis, we have no credit risk. So in that story I just told you, we are earning the yield we need to meet our obligations, but we are not actually taking credit risk. So we try to do things like that as much as we can. But long term, like we have a vision that Bitcoin is money. Money moves, money is used, it is useful. There will be capital markets and there will be debt capital markets in Bitcoin. And eventually there'll be a yield curve. And like we are part of building that, but that we are very much focused on like low risk, low yield, really concerned about credit risk. We've never had a credit loss. And we have been doing this since before BlockFi and Celsius and Genesis blew up.
I think one of the other ways that I know that when I was researching you guys and learning about you guys that made me trust you was looking at your investors. And Sam Altman was one of your first investors. You've got quite uh, a an impressive set of investors who believe in you and have put their name behind you. And then you recently, as I said earlier in the episode, raised $40 million as part of your next round. When we look at the Bitcoin economy and the energy that is happening around not just Bitcoin, but the rest of the economy, life insurance products and many other lending and borrowing and many other products, where do you see the Bitcoin economy now compared to where do you see it in the future?
I like the framing of we think of it as an economy. Actually, that's how we started this business. My co-founder and I sat down and we actually had this mental model that there's this country called like Bitcoin land. And Bitcoin land is unique in that it's global and it's decentralized and it doesn't have a government, but it is not unique in that, or it is like other countries in that like it has an economy, it has an economic system, and that economic system will have very similar financial institutions to every economy in the world. So there'll be things that look like banks, and there'll be things that look like lending and exchanges and payment systems with Lightning, and others, and that there'll be a life insurance company. And life insurance is something like 3% of global GDP. And we believe the Bitcoin economy will be huge and that 3% of its GDP should also be life insurance premiums. Where I see it in the future that's different from now is I think that there'll be a lot less volatility and a lot more a lot more like trading that happens potentially denominated in Bitcoin. I think that instead of oil contracts being settled in dollars, I could see them being settled in Bitcoin. And actually, there's like a fundamental connection between, or there should be a fundamental connection between the price of Bitcoin, the price of electricity, the price of energy. So I envision a future where I'm not sure that Bitcoin itself will be like what microtransactions are done in. I think that is going to end up being Lightning or something else. But I think this notion of like big, uh, like trades and transactions in the world, whether those are happening between sovereigns or they're happening between like ultra high net worth individuals or they're happening, between us and our policyholders, those types of transactions, I think will over time move away from the dollar, which has all the challenges of being a fiat currency, has all the challenges of like control from banks and
Endless
and
inflation.
and the Fed and inflation and all that, and they'll move toward Bitcoin. And that doesn't. I think some people have the vision that that'll mean that there won't be any centralized financial institutions, but I don't think that is realistic. I think that what makes Bitcoin unique is both that it is uncontrollable and that everyone has the ability to self custody. And that ability doesn't mean that everyone will self custody, but that like changes the fundamental dynamic of like where the locus of power is. And that the financial institutions like ours and Lendn and Coinbase and others are going to build up new structures that support that economy and the people who are participating in it.
It it just feels like we're so early. I
It
feel like
feels so early.
I say that all the time, and it feels so cliche to say it, but
Yeah.
it is so true. It is we are so early, and there is what is happening is as the Bitcoin economy and the digital asset economy grows, there is this natural crossover between these traditional financial products, which still have a place. And I think it's very easy for somebody to, especially a lot of crypto native people and people who've made their wealth from crypto and from being early to Bitcoin or being early to Ethereum or whatever token in the past, decade, that they have this, oh, I'm breaking out of the old system, right? I don't want to
Right.
participate in the old system. I'm not using life insurance. I don't want that product, right? But then you step back and you're like, okay, but wait, this product exists for a lot of good reasons and has a lot of benefits towards it, which can be used still today. So I think that there's, for our listeners, I really encourage everybody, whether it's Meanwhile or whether it's another financial product, if you have made wealth in your crypto and you are trying to think about how to manage that wealth in the long term, you really should look at Meanwhile and these other financial products, because don't just look at the decentralized products, right? Because a lot of these decentralized products, they're not taking advantage of tax optimization in the right way, because they're approaching it from tech, and they're thinking about how does the tech work the best and how does the blockchain work the best. And sure, that has a place, but for the long term, like, tax is still such a big part of your life, and nobody is, you know,
I have to say,
blockchain
I
tax.
feel like
So
in every Bitcoiner's heart, there's a tension maybe between self custody and a you know dislike of taxation, and we built an institution that can help you. But fundamentally, I actually think what you said is really important, which is we have so many folks, Bitcoin native maxis, people who own a bunch of ETH, who have some Bitcoin for the long term store value, who come to us and they say like, hey, you're the first company that I've talked to who feels closer to that, like being native, like, because that's like who we are, that's where we come from. And then we get asked and help people as much as we can, it's not our business, of like, you should probably think about a will. You should probably think about trusts and estates. And usually what happens is you get referred to like your uncle's wealth advisor, and that person like can't even spell Bitcoin, right? So we're really happy to like be part of that transition. And the two other things I'll mention is one that I mean, I'm, much less illustrious and much more less important to the history of the world than Satoshi. But we are similar in that, like, my whole fintech and insurtech journey began, graduating from college into the financial crisis and sort of looking around and being like, this is broken and this doesn't work. Um, so, like, I'm very happy to be building what I think is going to be a like long-term durable institution entirely built on Bitcoin. That it definitely rhymes with TradFi, right? Like that, like you couldn't say it doesn't with life insurance. But our ultimate vision is that whether you're an American or you're an Argentinian or someone from Nigeria or India or whatever, that having access to a product that protects your family, that's denominated in a store of value outside the control of governments, is super important. Like, Argentinians don't buy life insurance because they are going to live longer than the Argentinian peso. And you know, you can have varying degrees of belief about the dollar. Like, I'm actually less of a maxi than some of our policyholders. Like, I think there probably will still be dollars, but like, if you bought a life insurance policy in 2020, you've seen the purchasing power of that policy go down 30 or 40% with inflation. If you had bought, we didn't exist, but if you had bought a life insurance policy in 2020 in Bitcoin, you would have obviously seen the purchasing power of that go up, I don't know, 3x, minus the 40% because the dollar's worth less. But like significantly more. And that's what we believe is the fun that, like, yes, there's all these amazing tax benefits. And yes, there is the literal protection. But like, in some fundamental sense, we also think like, if you want to buy a legacy, or you want to provide a legacy to your loved ones, you should do that in an asset that's going to, we believe, increasing its purchasing power, not decrease.
Mhm. Yeah, it's I couldn't agree. I couldn't agree more. It's really, whether you're a a crypto, Bitcoin, digital asset investor that believes in the future of of this space, and that's why you're here, or whether you're just a non-crypto person that is looking to get life insurance for your family, like,
Yeah,
those people should
yeah.
also, you could onboard a lot of people for
Our
us into
policyholder,
crypto here,
well,
right?
I should say, we don't try to convince people to buy Bitcoin.
Yeah, yeah, yeah.
Like, that's
But
not really
but
the
I
business
kind of
point.
want to
But
use you guys as a
yeah,
way to
yeah. But
convince people to buy
what we do
Bitcoin.
find is we have two pretty distinct like personas of policyholders. One is the like crypto native, Bitcoin native, like Maxi DJ. It doesn't really matter, but like they're very like in the world. And then we have another set of users, particularly now that like BlackRock and Fidelity are out there saying you should have 2% of your retirement savings in Bitcoin. Well, you should have 2% of your insurance assets in Bitcoin. So we are now starting to have like family offices and entrepreneurs and like people who own, a business and, the great state of Mississippi, like just random people. They've already made the choice to buy and hold Bitcoin. And then like, why are you going to hold the ETF if you're planning to hold it forever? And they like find us and they buy a policy, but they obviously don't need to be convinced about life insurance, the tax. They often already know about that. They just sort of see this as the right way to protect their family. They're yes life insurance, and now they're yes Bitcoin. And I
Mhm,
think we also have
mhm.
a bunch of users who are yes Bitcoin, and like we are helping them become yes life insurance.
Yeah, 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 yeah. Wonderful. Zach, thank you so much for joining us today. Shout out to you and the whole team at Meanwhile. Appreciate what you guys are building. And anybody listening, if you want to check out Meanwhile or you want to speak to Zach and the team, we'll throw a link in the show notes. This isn't an affiliate. They're not a sponsor of the show. I'm not getting paid to say this. I just legitimately believe in this product and think you guys should check it out. Thanks again,
Cool.
Zach. Appreciate your time.
Thanks so much, Jay. Good conversation.
Thanks for listening in, everybody. Have a wicked awesome day. We'll see you back again tomorrow. Thanks for tuning in, y'all. Appreciate your time and listening all the way to the end. Before I let you go, got to let you know about this partnership that we have with OKX, where you could win up to $60,000 in cash prizes. That's on-chain cash, USDT cash, the good kind, the stable coin kind. Why did we set up this partnership with OKX? Because they're one of the leading crypto exchanges. They're trusted. They've got great security. They've got tons of great features, tons of great tools. Really a great place to trade and do it in a safe way. Hit the link in the show notes. Check it out today. Thanks again for your time, y'all. Have a good one. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.